Hello, everyone, and welcome to this conference call presenting Wavestone's financial results for the 24-25 fiscal year. My name is Benjamin Clément, Head of Financial Communications at Wavestone, and I am delighted to be with you today to facilitate this meeting and to share insights on our results and outlook. We are joined today by Pascal Imbert, co-founder and chairman and CEO of Wavestone. Good afternoon, Pascal.
Hello, Benjamin. Hello to all.
Also here around the table, Carsten Hoppner, Deputy CEO of Wavestone. Good afternoon, Carsten.
Good afternoon. Hello, everybody.
And Laurent Soupy, CFO of Wavestone. Hello, Laurent.
Hello, Benjamin. Hello, everyone.
And now I will invite Pascal to kick things off with a short introduction about Wavestone. Pascal, the floor is yours.
Thank you, Benjamin. So let me first take a few moments to highlight main characteristics of Wavestone. Wavestone is an international consulting firm operating in 5 key geographies: France, Germany, Switzerland, the UK, and the US. And we are supporting large companies in their most profound and strategic transformations. Wavestone generates 950 million euros in revenue, has 6,000 consultants, and is present in a total of 17 countries. Wavestone has the expertise to address its clients' transformation in all their dimensions, whether it be industry expertise, technological and digital skills, or sustainable development competencies. We like to think that Wavestone is a unique player in the consulting market. First of all, Wavestone is a European origin firm born in France and Germany, unlike its major global rivals, all of Anglo-Saxon origin. Wavestone is also an independent consulting firm focused on consulting and not on system integration or on outsourcing, which guarantees the impartiality of our recommendations, unlike other big players who are at the same time consulting firms, but also IT services companies. Moreover, unlike partnerships, Wavestone has long been a listed company with a clear long-term and public strategy, a listed company meeting the highest standards in terms of transparency, governance, sustainability, and ethics. Finally, Wavestone closely combines in-depth knowledge of each industry and top-notch technological expertise. Indeed, technology is core to Wavestone's value proposition, a legacy dating back to Wavestone's creation and carefully nurtured all along our business development. With its 6,000 employees, Wavestone is not a consulting giant, but we benefit from a precious asset, which is the fact that we are a fully integrated firm where collaborations between geographies operate seamlessly and multidisciplinary project teams are the norm, unlike the silos that characterize traditional partnership. So I hope you know a little more about Wavestone now. And Carsten, please could you take the floor in order to present the highlights of 24-25?
Thank you, Pascal. Let's take a look at our results from 24-25. Over the entire fiscal year, the revenue amounted to 943.7 million euros, which is an increase of 35% compared to what we had the year before. On a pro forma basis, annual revenue was stable compared with the previous year and in line with the updated target that we gave last December. It should be noted that the working day impact over the fiscal year was favorable at 0.5%. And that means that in conclusion, Wavestone experienced a slightly negative economic growth of 0.5% over the full year. Now let's look at the operational indicator for the fiscal year. So the firm's consultant utilization rate remained resilient for the entire fiscal year, stable compared with H1. At constant scope, the utilization rate stood at 72% compared with 73% the whole of the previous fiscal year. Despite increased competition, The average daily rate was 939 euros in 24-25, compared with 937 euros over the first 9 months of the fiscal year. Regarding business development, the order book decreased and reflects the cautious approach of our customers at the beginning of 2025. At full scope, it stood at 4.2 months of work at the end of March, compared with 4.5 months at the end of December. At constant scope, it was 3.6 months, compared with 4.1 months at the end of March. Now, a few words regarding human resources. The staff turnover rate continued to fall in the last quarter of the 24-25 fiscal years. At the end of March, on a rolling 12-month basis, and at full scope, it stood at 12%, compared with 13% at the end of December. At constant scope, it was 12%, compared with 14% at the previous fiscal year. As planned at the start of the fiscal year, we made approximately 1,000 gross hires, resulting in a 4% increase of consulting headcount from March 24 to March 25, rather than the 3% that we had anticipated. And this was due to the lower turnover that we had. At the end of March, Wavestone had 6,076 employees, compared with 5,894 a year earlier. Now, I would like to share with you some information regarding the combination between Wavestone and Q-PERIA. The post-merger integration program has been completed. We have put in place a unified operational governance, converged operating models, and combined corporate functions, all supported by widely integrated IT systems. However, a few transformation projects will have to continue in 25 and 26. Notably, the creation of a new SAP-based ERP that will help support the firm's future growth. We are able to assert that this combination is a success. Thanks to our enlarged value proposition, our broader international footprint, and the new size of the company, we are now able to win projects that were unattainable before the combination. Despite the difficult environment, we observe growing business synergies in terms of sales and in terms of capabilities. And we have noticeable low staff turnover with very few key people that left the company after the combination. After the successful integration, we are able to confirm the target to return to recurring operating margin of 15% that was shared at the launch of the combination. However, in the context of a challenging and uncertain economic environment, achieving this target may take longer than anticipated. We now aim to return to this profitability level during 2027 or at latest March 2028. As you can see, our sectoral exposure has slightly changed since the end of March 2024. These changes are consistent with our observations in the market environment. The automotive sector drops one place in the rankings. This reflects the share of revenue generated by the sector because the automotive companies in Europe are facing strong difficulties. The banking sector is becoming our third largest sector compared to being first 1 year ago. This illustrates well the difficult environment banking clients are facing, forced to reduce or even stop projects. Insurance becomes our largest sector. In the context of a relatively stable market, it also benefits from our enriched value proposition following the combination of Wavestone and Q-PERIA. The energy sector was very dynamic, and this resulted in an increase of revenue. Energy now represents the second largest market of Wavestone, and we will continue to invest in this sector in the years to come. The geographic distribution of our revenues has not changed significantly. It reflects our internationalization since combination with no more than half of the revenue in one country. Looking at our top 20 client portfolio, we can say that it's representative of Wavestone's overall client portfolio, a portfolio of major accounts with a good distribution in most of our economic sectors. All right, Laurent, I think now you can dive a little bit deeper into our figures.
Yeah, thank you, Carsten. As you have seen, Wavestone annual consolidated revenue is up by 35% over the 24-25 fiscal year. In terms of profitability, the firm achieved a recurring operating profit of 119.1 million euros, up 17% compared with the previous year. The recurring operating margin stood at 12.6%, in line with the firm's revised target from December 2024. Based on the recurring operating profit, we took into consideration the amortization of client relations, which stand at 8.4 million euros. You can see that operating income and expenses were significantly more limited than last year. The 23-24 fiscal year was indeed marked by the costs of the combination with Superior. There were no such exceptional expenses this year. In the end, operating income margin therefore slightly increased compared with the previous year's pro forma positions, 11.6% versus 11%. The cost of net financial debt amounted to 3.2 million euros in 24-25, compared with 1.6 million euros 1 year earlier. This is related to the increase in financial debt resulting from recent acquisitions. Other financial income and expenses amounted to 3.1 million euros. Finally, net margin amounted to 8% compared with 7.3% 1 year earlier on a pro forma basis. Lastly, the earnings per share stood at 3.09 euros in 24-25, compared with 2.71 euro 1 year earlier. Now let's take a look at our cash flow statement. At the end of the 24-25 fiscal year, Wavestone generated operating cash flow of 133.4 million euros, up by 31%. After taking into account tax payments and a change in working capital requirements, the firm generated operating cash flow of 89.3 million euros, up by 7% compared with the previous year. Investment transactions consumed 48.7 million euros over the fiscal year, related to the payment of Superior's and Aspirant's earnouts. Cash flow related to financing consumed 40.2 million euros. On the whole, the gross cash position of the firm is globally stable compared with the end of the previous fiscal year. On the balance sheet, next slide, we can see that shareholder equity stands at 633.4 million euros on end of March 2025, up by 11% compared with the previous year. Net cash amounted to 25.6 million euros at the end of the fiscal year, compared with net cash of 19.3 million euros 1 year earlier. It should be noted that at the end of March 2025, there were no remaining earn-outs due. With regard to Wavestone's capital, the majority shareholders continue to hold slightly more than 60% of share capital. Wavestone employees, including partners and other corporate officers, as well as shareholders resulting from the combination with Superior, hold slightly less than 10% of share capital. Free float is therefore slightly below 30%. The potential dilution of the share is zero, since we have covered all of our free share allocation plans with treasury stocks. Finally, on July 29, 2025, at the annual general meeting, Wavestone's board will be proposing a dividend payment of 0.46 euro per share for the 24-25 fiscal year. This represents a dividend increase of 21% compared with the amount paid a year earlier. I now will hand over to Pascal.
Thank you very much, Laurent. And now let's turn to our 25-26 outlook. Or maybe before talking of the 25-26 outlook, let's first discuss the recent acquisition of Wevoo. Wevoo, a leading player in product management consulting in France. Wevoo was a company founded in 2019 in the context of digital and agile acceleration. the business of Weevoo being supporting its client in the design and launch of digital data and AI products. With around 100 employees, Weevoo posted in 2024 a revenue of 11.5 million euros with an adjusted EBITDA margin of 7%. The acquisition took place a few days ago on May 22nd. At this occasion, Wavestone acquired 100% of Weevoo's capital shares, an acquisition that was fully financed in cash from Wavestone's own funds. The acquisition price is 11.5 million euros in enterprise value, to which up to 4.5 million euros may be added, conditional on Weevoo's growth and profitability improvement by the end of March 2026 and March 2027. Weevoo will be consolidated in Wavestone's account from June 1st, 2025. We aim together at accelerating Weevoo's growth with the decision makers within the digital businesses of our large clients in order to position Wavestone as a key player in digital product creation in France. If we have now a broader look on our 25-26 outlook, we have to say that this outlook is set against a backdrop that remains difficult. The demand for consulting remains heavily constrained, particularly in the banking, industry, retail, and luxury sectors. The fact that the context is difficult is something we've been saying for several quarters now. What is new, however, is the dramatic rise in uncertainty and volatility in a completely unprecedented economic and geopolitical situation. Uncertainty, as one could expect, is holding back our clients' investments and putting pressure on consulting expenses. In recent weeks, we have indeed even experienced the postponement of certain projects or the cancellation of some operations. This remains a sporadic phenomenon at this stage, but it's indicative of our clients' mindset. As for volatility, it manifests itself in fast-changing trends among clients and sectors, occurring at a pace we have never seen before. To name just the latest examples, I would mention the sudden rise of optimism in the aerospace defense sector, whereas at the same time, demand is experiencing a downturn in transport, which was a resilient sector until a few months ago. Nevertheless, despite this disrupted environment, some sectors such as energy, life sciences, or insurance remain resilient over the period and since several quarters, while cybersecurity, cloud, SAP, and of course AI maintain good momentum over time. From a geographical standpoint, the overall difficult market conditions I just described extend to all regions where Wavestone is operating, with the exception of North America, where the positive trend mentioned in autumn 2024 has continued since. In this demanding environment, our approach for 25-26 will be guided by three priorities. First of all, we focus on improving the firm's profitability by increasing the share of internal revenue, that is to say, based on our internal teams at the expense of subcontracting, by adopting a cautious and targeted recruitment policy, and by maintaining strict control over our overheads. We will also capitalize on our good trend in North America by leveraging the strong market conditions as well as the momentum generated by the recent consolidation of all our teams in the region into a single business unit. Finally, we will continue to mobilize all our teams on sales paying attention to continuously adjust our targets in response to the volatility I mentioned earlier. We will also emphasize, when appropriate, our European identity, the key differentiator in the current geopolitical context. And we will focus on the most promising offerings with a particular emphasis on artificial intelligence, with the ambition of becoming a key player of AI-driven transformations. Even if the market has never been more uncertain, we have set two financial objectives for 25-26. We aim, on the one hand, to return to positive organic growth after a year of stability of our revenue. We also aim, on the other hand, to increase our recurring operating margin beyond 13% compared to 12.6% for the 24-25 fiscal year. These objectives are to be understood at constant exchange rate. They exclude Weevoo for the time being, and they, of course, exclude any new acquisition we may make during the current fiscal year. Next appointments for Wavestone are on July 28th at 6 p.m. Central Eastern Time for the publication of the first quarter 25-26 revenue. This publication will be followed by the general meeting of shareholders in the morning of the next day. Once again, thank you very much for attending this conference call, and I hope to see you all very soon. Have a good day.
Thank you very much.
Bye-bye.
Thank you.